Hello everyone! So, in every investor's life there comes a moment when he or she has to admit that they probably betted on the wrong stock. And in case you've been following this channel, even though it's a new channel, there are a few things you probably know by now. I'm not a professional investor or a financial advisor, I'm a CEO of a gaming company. If there are gamers out there, please leave a comment so I know that you're here. We're trying to grow a fun community here, which has been going great so far. I really like CTRM. This is one of the stocks that I've been talking a lot about and I'm very bullish on, and I really hate SNDL. That's kind of the basics of the channel so far. So today I want to talk about CTRM. A lot of news came out lately, and specifically I want to talk about the reverse split that is on the horizon and if this ship is sinking, because as I said in the weekly video, a lot of the calls we've made this week and the past few weeks have actually been amazing, but this is the one red big flag in our portfolio so far. I called this as 0.95 and I said that I think it's a great buy and it's time to own up to it and be honest about everything I am thinking now. I did a lot of research and rethought my position, so in this video we'll talk about what I currently think and what I'm planning to do with my portfolio. None of this is financial advice. Also, in case you're not new to the channel and you've been following the channel, you'll see that we have a new setup with cool new effects, so I can do this now, and if you like the channel I can do this with cool effects, which are not edited. This is all real time now. So this is awesome. Let's get to work. So CTRM, they are dry bulk shipping company. They have vessels and they, move them from place to place. That's the base of it, in case you don't know the company. They are up 179% over the past 6 months, but down from their highs to 74%, which is insane. Lately they've been dropping and dropping, and people are saying that they can get to $2, which I said in my videos that I also think that in a year, like 12 months from now pretty much, well, maybe a month ago, they can get to $2. So far this has not been going well at all. At the moment 0.45, which is very low, and the past few days they just keep dropping, and they had one big drop. So let's start with going over what happened and then get to the cherry on top, which is the reverse split of the stock. So here we can see a pretty big drop of 20% in one day, and this basically happened because they did a direct offering for $0.65 per share. So basically they raised 125 million, but they offered a price which was under the stock price, so the stock price dropped even under that. But then the bad news keep coming, and suddenly this company, which a lot of people liked the stock, again like me, suddenly you see articles as why this stock is dropping today, and this is from yesterday, and this stock is talking about the Baltic Exchange Dry Index, which is basically an index showing the prices that companies like CTRM can charge for what they're supplying. It's basically how much you charge to move things with those vessels, right? So this index has been going up pretty fast lately, which is supposed to be good for the stock, but lately it's been dropping a bit, so that's not a good sign for the whole industry. Also news like that, which are saying like, don't fight it, just give up, the stock is dead, it's going down like 60-70%. So CTRM, which was a loved stock just a few months ago, suddenly is getting so much fire from everyone, it seems. And the only good news that we can see lately is from Friday, April 19th, that they are announcing another vessel acquisition, which is funny because this is the same date. This is also a news article that came out on the same day. So the story with the acquiring vessel acquisitions is kind of becoming of a joke at the moment. So pre-pandemic, this company had 6 vessels, and now they upped their fleet to 15. I think this is the 15th one. So they've basically been preparing to get out of the pandemic, buying vessels, more than doubling their fleet now from 6 to 15, and kind of using, you know, like raising money, getting money, using this pandemic to buy ships from other struggling companies. And that's great and smart. Their PE ratio was great. Everything was looking great for this company. And then suddenly, this direct offering, their stocks started going under, and now they have a big problem. And the big problem is the stock price. In order to not like to stay on the Nasdaq and not get delisted, they need the stock to be above $1 for 10 days. Now, didn't seem much of a problem a few weeks ago, but getting to $1 from 0.45, and they have until, I believe, June, the end of June, it's June 26th or something like that, to do that. Otherwise, they'll be delisted. That doesn't seem likely anymore. They need to more than double their stock in order to stay on the Nasdaq. So what they will have to do is a reverse split, and everyone are afraid of that. Now, I'm gonna take a second to explain what is a reverse split to those who don't know. Basically, the idea is very, very simple. I made the chart here. Sorry, it's not very nice looking, but the explanation is pretty simple. Let's say we have a company called CPR, and CPR is worth, like its market cap is $100, right? And they have 100 stocks that they're offering. So every company has a number of stocks. This number doesn't matter. It can be 1 billion for some companies. It can be 10,000 for other companies. I literally don't even remember how much stocks our company has because it doesn't matter. But you take the valuation of the company, you divide this by the number of stocks you get, and this is how you get the stock price. So for our CPR that is worth $100, we have 100 stocks, so every stock would worth $1 exactly, right? Then the company says, okay, we are going to do 2-to-1 reverse split, which means if you have 100 stocks of the company, now we're just gonna divide it by 2 and you will have 50 stocks. So, and every stock will be worth $2. So the stock price changes to $2, but CPR still stays $100. It's as simple as that. People make it a bit more complicated in some videos that I saw. It's really not complicated. It's very, very simple math. Also, there is like a lot of videos that talk about if a reverse split is good or bad. And the answer is, and that's a definitive and like the objective answer, not meaning that this is what happens in reality, but mathematically speaking, it doesn't matter. It's the same thing. It's not important how many stocks there are. It's not important their price. What matters is the valuation of the company. And in this case, it stays the same. It stays $100 like it was before. That being said, a lot of people are very, very scared from this split for CTRM, and I wanna explain why. And the reason is actually pretty stupid, but that's the reason. The reason is that people think that it's bad. There is literally no real world application to reverse split. But what usually happens historically when a company does a reverse split is that the stock goes down. Why is that happening? Because it doesn't look good. So why would a company do this split? So sometimes it's just to look better. So for example, we have a stock that is $20 and we want to seem like a bigger, more, you know, expensive company. So we are doing like 10-to-1 split, and now our stock is worth 200. So we are awesome. Now it sounds stupid, but those things work. Another reason why a company would do a reverse split is that they have a problem with the listing, like in this case. So in order to stay on the Nasdaq, they have to fill a bunch of criteria. One of them is being over $1. And in this case, they just have to up the stock price to be above $1. So they might do 1 to like 10 to 1 split, and then the price will be $4.5, right? But still, in your portfolio, it will be worth the same. Now, why are people afraid of this so much? Because historically speaking, this goes down. Why does this go down? Because usually the reasoning why you would do reverse split are not great. It's either you just want to like superficially make your company look better and the stock price more nice, or you have a problem with the listing, which is even worse, because this is never a good thing for a company. This is basically what's happening with CTRM. Now, as far as my conclusions from this, I still think the company is doing the right things in the long term. I still like the company, and I had the dilemma, do I sell? Because this happens, you know, you're wrong with the stock, you sell your stocks, you take the losses, and you carry on with your life. If you invested in 10 stocks and one of them is not doing well, that's fine, it happens, this is part of the game. The other option is, do I average in and buy more at 0.45, which is a pretty big change from my current average, which is around 0.73. I, at the end of the day, decided to average down, but I will say this. I will admit I was wrong on the stock. And why am I saying that even though I'm still averaging down? It's because it's a bit different, you know, what I do and what I think is the objectively good thing in some cases. Me personally, I think the company is doing great. I think not doing great, like doing the right moves. I like the management. I think long term they are doing the right things. But that being said, looking forward, there are more and more bad signs for the company. So would I suggest to anyone getting into the stock now? I sadly would not. And it sucks to say that, because I bought in at 95, I then averaged down after it started crashing. So admitting that I would not suggest to anyone, even though again nothing here is advice, right? But I would not suggest anyone of my friends, for example, to buy the stock now, even though it can go up, and I still believe it will. Kind of sucks to me, but I want to be very honest on this channel. While I do think long-term this company will do well, I think it became very, very risky. And those are risks that weren't there before. When it was like 95, it seemed very likely that it can go over the dollar. But now it's, with this reverse split and their direct offering what they did, if you ask me, I think raising 125 million for this company is a good thing long term. But all of those things together, and the fact that it's very likely to drop if they do this reverse split, and the fact that they pretty much have to do this reverse split in order to stay on the Nasdaq, all of those things suddenly make this a very, very risky play in my mind in the short term. So I kind of have to, you know, change what I let's say publicly say about this, that's what all my research led me to do. Even though I will be honest, this is not what I am doing. I am averaging down. So this is one of those very rare cases where if someone asks me, oh, what do you think I should do, I would tell them something different than what I'm personally doing. I just wanted to be open about this and you know, run you through this this whole story and the stock and my thoughts and what I'm actually gonna do about this stock. Let's do this cool trick again. So this was the video. Sorry it was long, but a lot of things are going with the company, and sometimes it's worth the time to go more in depth and, you know, decide to do. In this case, my position is pretty huge in this company, so I wanted to take the time and talk about it a lot. And now I'll do the cool trick. If you stayed with us until here, please join our community. This channel is new. It's tomorrow we're celebrating the first month here, and it's been doing amazingly so far. And we have this new neat trick. So with the animation and not edited, I'm super excited by that. Maybe I'm becoming old and technology like is you know, impresses me easier. But I want to thank you all for watching, and I will see you in the next video. I do videos every day, so that would be tomorrow probably. Until then, let's hope for a more green and fun week than it has been until now, and cheers everyone.